Hello traders, Gary Wagner here, just about 10 o'clock in Honolulu, 4 o'clock in New York. It is Tuesday, 29th day of September 2015, and this is the daily report for gold and silver. We do have gold off today, off about $5 after yesterday's dramatic down move. We are still trending and trading lower on the day, traded to a low of 11.23 and a high of 11.34 on the day. Now, when we break the day down to its individual components, and to do that, we are looking at a 60-minute chart. You can see the beginning of the day right in here. The market is at the lows at this particular point, but then for the next 3 hours actually trades higher, and this is where we saw our high of 11.34. But from there, we pretty much saw this market meandering lower throughout the day, up until the last few hours in trading, in which it really stabilized with a low just above 11.26 and not having the ability at all to move back near these highs of the day. So I draw your attention to this daily chart. Let's go ahead and blow this up. But this has some of our key levels that we have been watching. Right now, as you can see, our lows on the day have been around 11.24, 11.25. We are charting major support right now at 11.21 and then again at 11.10, and these are Fibonacci-based levels. However, when we look at this market, what stands out more than anything else is the fact that if we do continue to track lower, we now have a market in which we have had a series of lower highs. We would get a lower high than the previous low. Of course, this high here was 1170, this being 1156, and we talked about really how important that number is, 1156, because this entire range, let's call it, between 1170 right in here and 1156 really matches up in terms of our long-term charts to a price point that we really need to see this market trade to if we can get bullish in any way. And what I'll do is let's go ahead and bring up our monthly chart so we can illustrate this point a little bit better. Really what we're looking at is, as we talked about yesterday, these two key levels, one at around 1092 to 1086. I adjusted that slightly this morning, trying to get it as finely tuned to the bottom of this particular low right in here. And that obviously that's the absolute major support in the market. That's the point we haven't broken. But resistance really right now has got to be at 1156, because if we look at this particular chart, and this chart is a monthly chart, so we're looking at extreme highs and extreme lows, and we're going to go ahead and blow this up, kind of move it over. You can see that this is the areas that we have hit in the marketplace that have gone beyond it. But for example, when we look at 3 months ago in the market, it traded above this price point but closed near the lows of this particular area. We saw the market have a slightly higher low in the previous month. This is last month, and of course this being September, you can see that the market in essence is almost unchanged from where it opened at the beginning of September. And now that we're 1 day away from the conclusion of this month, unless we have a dramatic move one way or the other, we are going to get a very, very consolidating candle, very much like a doji candle in this particular month. So traders, what about silver? Now, silver is up about a nickel today. We can see that very, very clearly on our daily chart. But again, very, very slight range between the open and close. Very, very slight range between the high and the low on the day. After yesterday's dramatic sell-off in which we saw this market, which traded above $15, call it 15.15, 15.20, closing at 14.50. 14.50 was also the low that we hit on the day. Will we find support in this area? That's something time will tell. The other thing that we do notice is, considering these lows that we hit at 14, we can make a case for a trend line, a support trend line, in which the market did trade into that area over the last couple of days, but is currently trading above it. But the big picture, traders, the big picture has got to be in our weekly chart, not in our daily chart, because when we look at our weekly chart, We see that silver is really tracked within a pretty tight range. 1566, those have been the absolute highs in the market. Of course, you've got these lows here at 14, but for the most part, if we just look at the bodies, meaning where the market opened to where the market closed, what we see is on the low side, just at around 1450, a little bit shy of that, maybe 1440 in these two candles here. And on the high side, of course, we're just above 15. So we've had this very, very tight range of about $1 in silver, and it still remains under pressure, and I am still bearish overall on the precious metal. Now, in terms of markets that have been under pressure, consider platinum. Out of the precious metals group, this is a market that has been under more pressure than any of the other markets. Of course, we saw a tremendous rise as this market went in August, back last month. Let's pull up this daily chart, but back in August, tracking at around $950 per ounce to move up about $100 to $1050. But since that point, it has had this dramatic decline. Now, on a daily chart, take a look at this. We had this tremendous fall yesterday, as we did in all of the precious metals complex, trading tremendously lower, hitting this low at around $920 per ounce. Today, though, the market opens. We've got this pure doji, which is why it has interested me to see if we found some sort of support in this market. But the market actually traded to a low of about $900 intraday today per ounce, only to recoup substantially right to the actual open of the market at around $917 per ounce. Platinum is something that I do want to look at, and I do believe if we see any kind of support coming into these markets, platinum will be the greatest recipient of any kind of a rally mode that the precious metals could go into. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for another daily update and review. Bye-bye.